Today we will take a look at the best Vanguard ETFs designed to help you grow your wealth as well as help you build that generational wealth. Vanguard ETFs are world famous for offering some of the lowest costs but giving some of the best returns over a long-term perspective. Owning a piece of these ETFs has historically shown to be a great investment for people of any age. One of Vanguard's most famous ETFs is the Total Stock Market ETF, VTI. Having VTI in your portfolio means one is now invested in 4,028 different stocks. This offers a nice blend of large cap value stocks and growth stocks. It gives great diversified exposure to all the sectors, the biggest being technology at 24% and healthcare and consumer discretionary at 14% apiece. Investors trust VTI so much that they currently have a mind-boggling $1.15 trillion in assets under management. Since its inception in 2001, it has returned 425%, including the dividends that it pays out every single quarter for just being a shareholder. So we get paid while we wait for the market to just continue to work hard for us. With a low expense ratio of just 3 basis points, that's just $3 for every $10,000 invested. Now that sounds like a bargain, since we don't need to listen to 4,028 different earnings calls or look through their financial statements. One sector that will literally never die is healthcare. Healthcare is a booming industry with demand only expected to continue to rise as time goes on. And now you too can profit from all of the innovations and surgeries and routine checkups that happen on a daily basis. VHT, Vanguard's healthcare fund, has 399 different companies which give great exposure to all the sectors within healthcare. We can see pharmaceuticals, biotechnology, and healthcare equipment are the biggest subsectors. This gives us access to amazing companies like United Healthcare Group, dividend aristocrats like Johnson & Johnson, AbbVie, Merck, Abbott, and so many other fantastic organizations that you can now become an owner of. And VHT of course pays dividends as well every single quarter, and over time, by practicing a long-term buy and hold strategy, the amount of dividends every year continues to go in an upwards direction. From just $1.04 in 2011 to over $3.04 a share in 2021. Now, getting double-digit pay raises every year for just being a shareholder, that's pretty amazing. In terms of capital appreciation, the company has given 548% returns since its inception in 2004. Now, I'm very impressed with the returns for just such a small expense ratio of just 10 basis points, or $10 for every $10,000 invested. VHT gets rebalanced quarterly and gives broad exposure to healthcare companies with its currently $17 billion in assets under management. Now I got one last Vanguard ETF for you. One more reliable sector that never fails, and that is real estate. Real estate produces the most millionaires than any other asset class, and what if you don't have thousands of dollars just laying around for a down payment? No problem with Vanguard's VNQ, an ETF that invests heavily in REITs that own office buildings, hotels, retail properties, warehouses, and so many other real estate opportunities. Being a landlord can be very stressful. You have to deal with tenants, the tenants may not pay you, you have to deal with maintenance, but with real estate investment trusts, they do all the work for us and they pay us some pretty high dividend yields. Now, real estate investment trusts or REITs, they can avoid paying corporate taxes if they distribute 90% of their earnings to shareholders. Hence why the dividends are so fat. They're incentivized to pay us more. VNQ is boasting a strong 3.6% starting yield. And it has fabulous companies like Prologis, American Tower, Equinix, Public Storage, Realty Income. They all lead the charge as the biggest individual stocks in this fund. The fact that I've made stock videos on almost all these companies at one point is a great sign. Looking at the subsector breakdown, we have specialized REITs at 37%, residential at 14%, industrials and retail at 12% apiece. I mean, even in regular day-to-day life, it would be really hard to get exposure to some of these sectors unless you were super wealthy, but being an investor in VNQ, it gives you access to opportunities that the rich have. All for a really low expense ratio of just 12 basis points. That's $12 for every $10,000 invested. VNQ has returned 264% since its inception 18 years ago. which is slightly lagging behind the overall market, but VNQ may be a good way to get real estate exposure, as many other popular ETFs like SCHD or SKID, they do not invest in any real estate. VNQ has $66 billion in assets under management, and they pay out dividends every quarter, paying in the March, June, September, and December tranches. So today we covered the overall stock market, we covered the healthcare sector, and we covered real estate, all areas that should continue to be flourishing over the next coming decade. Remember, true wealth is not built overnight, but it's a continued process of making smart choices day after day. Tell me what your favorite Vanguard ETFs are in the comments below, and as always, my videos are found in podcast form under the Clad Cash podcast name, and I'm out. I'm out.